Hello, this is Andrew Thake from Minds and Money. I'd like to welcome you to our 10th online Minds and Money global event. We first started these online global events back in June 2020 and delighted to be at our 10th edition. Throughout the 3 days, we'll be having some very, very exciting content, some great fireside chats, and also some fantastic pitch battles. The meeting planner is also open for investors and mining corporates that want to do one-to-one meetings, and they'll be open for the entire 72 hours that the event runs. To kick off the event, we've got a fantastic fireside chat with Nikos, Kavalis, founding partner of Metals Focus. Delighted to have you with us today, Nikos.
Thank you very much. It's wonderful to be here and great to have the opportunity to have a chat with you and participate at Minds and Money. As you know well, we really respect your events, and it's always an honor to be invited in them.
Excellent.
So thank you, first of all.
Thank you very much for the compliment, and we're always delighted to have Metals Focus at our events as well. Perhaps I can start off by asking a question about gold. Did gold perform as you expected in 2021?
Of course, our forecasts are always right. Hand on heart, no, not really, not at all, in fact. At the start of 2021, we had really expected a much higher trading range than what we actually saw. And in fact, we were forecasting an average closer to 2,000 rather than what we saw, which is something closer to 1,800. And really the big surprise for us was the way US yields moved. Honestly, 12 months ago, I would have told you with really some great confidence that real yields will remain under pressure for most of the year ahead. And clearly, this is not what happened. And if we want to take it a step further and see why, in no specific order, confidence in the US economy, fiscal stimulus being quite significant, quite strong, and eventually strong and growing indications that the Fed was prepared and was in fact intended to respond to the buildup and the stickiness of inflation sooner than the world had originally expected. All these factors pushed yields a lot higher than we had expected, and that no doubt helped gold, hurt gold.
So looking ahead to 2022, what is your outlook for gold in 2022? What are your key predictions and thoughts?
Sure. Well, first of all, just one silver lining that we've seen in the last few weeks is that gold has managed to keep to the 1,800 mark in recent weeks, in spite of yields spiking again since the start of the year, since the start of January. So that gives us confidence that the downside is reasonably well protected. And looking ahead at this point in time, we're actually moderately bullish on gold, at least for the next 3 to maybe 6 months. And this is mainly a reflection of the fact that we believe that market expectations on US policy and US policy rates have gone a little too far in our view, Andrew. Our base case is that we won't see one in March, which is the current consensus if you look at the Fed funds future. And if our assumption proves correct, we think that there will be a repricing and gold will enjoy some upside, perhaps reaching a peak of maybe 1950, around the 1950 mark, for example. I need to point out, though, that later in the year, our expectations are very different. So later in the year, we expect that the tides will turn for gold once again. Specifically as policy normalization or the gradual move towards policy normalization becomes a reality in the second half. And also considering we expect some of the inflationary pressures we're seeing right now will ease. I mean, these two factors will put upward pressure on real interest rates. And we think that it's hard for gold to avoid liquidations as a result of that. So if we want to put a number to it, we wouldn't be surprised if gold, after rising to 1950 in the second half of the year, we saw a low of possibly below 1700. So, to summarize, quite bullish for the first half of the year, and cautious for the second. And overall, an annual average a little over 1800, so a little higher than last year's overall average, and which would be a new all-time high in annual average terms. So a decent but unremarkable year for gold.
Okay. For me, the commodity that slightly surprised me last year was silver. Honestly, if somebody had asked me at the start of last year, I was quite bullish about silver, but it ended 2021 13% down. What did Metals Focus predict for 2021, and were your predictions more accurate than mine?
No, I'm afraid not. I mean, look, considering my comments, my earlier comments on gold, and considering the strong correlation between the two, I mean, silver tends to be a high beta play on gold historically. It follows that if we got gold out by a couple of $100 in terms of the average in the trading range, we got silver similarly wrong. So we were also expecting a much better performance. So not so different to you. I mean, we were also quite constructive 1 year ago, and the reality turned out to be really quite different.
And in terms of, you just mentioned the correlation between gold and silver. So is the in-house view of Metals Focus that you're a strong believer in the gold-silver ratio?
Yeah, look, I mean, we definitely look at the gold-silver ratio very carefully. In the previous decade, we've seen that gradually inch up, and I think there were pretty good reasons why it gradually inched up. The previous decade was one where the silver market was in a perpetual surplus. This is very clearly changing. We are seeing silver fundamentals improve structurally in the last year or two, and we think that this new status quo will persist for some time ahead. And generally speaking, that should help the ratio gradually move down. But let me be clear, this fundamental improvement it's very hard to see it have a material impact on the price in the next 6 to 12 months. This is more of a long-term supportive factor for silver.
So if you had a sort of prediction as to for the outlook of silver in 2022 and what sort of price it would end up on, what would you sort of say?
Yeah, so look, I mean, we think for 2022, we think that silver will continue to be more of a macroeconomic, quasi-monetary sort of play. We think that it will move in line with gold. We think it will have a high beta versus gold. So in other words, during the first 6 months when both metals are rallying, we think silver will outperform, and then the opposite will happen the second half of the year. If we want to put numbers to it, we could see a high as much as $29 before mid-year, by mid-year, and we could see the prices drop to below 22 again before year end as tides turn for both precious metals.
Moving on to PGMs, obviously Metals Focus is extremely well known in the precious metal space, but personally I think that your research and pieces on PGMs is sort of like second to none. What are your thoughts and outlooks for PGMs in 2022?
Yeah, look, looking ahead into the next 12 months, there are very strong indications that the supply chain challenges that have been affecting the auto industry, particularly the semiconductor shortage, even though they're not completely gone, there's still a very big issue at the moment. There are very clear signs, from our field research, talking to our contacts, that these problems are easing. So look, on the back of that, we just have to be positive about PGMs. We think demand conditions will improve over the course of the year. More generally, if we're looking at platinum, we think that the platinum market is moving away from a structural surplus to a small balanced market, and then moving into a deficit probably next year. So that's also a positive development. So we are quite constructive on all three major PGMs, platinum, palladium, and rhodium.
For those that would say, obviously, like palladium performed so badly in 2021, what makes you think that it would turn around this year?
So let's first give some context in terms of 2021's weakness, which is crucial to understanding why we're constructive on the metal this year. So the reason why palladium performed so poorly last year is no doubt the chip as well as other part shortages that the auto industry were faced with last year. I mean, just to illustrate how important this was to the auto industry, if we use, I'm not sure if you're aware of it, Andrew, we use this company called LMC Automotive. They do really good work on the auto industry, and we use their inputs into our models, and they're our go-to people. If we compare what they were seeing a year ago to now, so their latest estimate for global light vehicle production in 2021 is around 11 million units, or 13% lower than what they had forecast it would be 1 year ago. I mean, and given the auto industry is by far the biggest area of demand for palladium, more than 80% of global palladium consumption comes from the auto industry, this had a profound impact on its overall supply-demand conditions, basically taking it from a metal that would be in a structural deficit to a metal that was in surplus. We also think that this was amplified by some stock releases in China. And last but not least, another factor of creating this massive underperformance was palladium's earlier success. We have to remember that when it peaked at over $3,000 an ounce in May 2021, palladium's price was more than 6 times higher than its 2016 trough. So we had a very high starting point, a sudden, dramatic worsening of its supply-demand conditions, and this is why we saw this sharp decline in prices. And simply put, in the next 12 months, we think that a lot of these factors will reverse. Automotive demand will, unless there's something, a black swan event that no one can really predict, automotive demand is almost certain to experience a really sharp rebound. And inventory replenishment across the supply chain, most notably in China, could also come in and amplify the effect of this. So we're basically looking for a market which starts the year in a surplus, because palladium is still, in our view, in a surplus on a day-to-day basis, and moving to a dramatic or significant deficit by the second half of the year. So that drives our bullish price expectations.
Of course, over the last 2 years, we've had a global pandemic, and we've had COVID-19. Coming into 2022, what will be the ongoing impact of COVID-19 on the commodity markets?
Sure. Look, the obvious one is the continued effect it has on supply chains. I mean, the news is out. Every day we're seeing news about the zero COVID policy being maintained in China, and China is crucial is a crucial supplier to the world, and that there's no doubt that this is having an impact. This obviously has a direct effect on precious metals. The impact on auto production that we had last year was to a large extent because of COVID, and we're not out of the woods yet.
Sure.
It also has a secondary effect, though, in the sense that these supply shortages have translate into higher inflation and sticky inflation, and that in turn has an impact on policy decisions. And look, I mean, this is really not an easy time for policymakers. On the one hand, they're faced with strong and sticky inflation, which creates the obvious temptation to hike rates to keep it under control. But the flip side of this is that given these price pressures are supply driven, they're not because demand is healthy, but the main factor that drives them is a lack of supply. Rates may not have the desired effect, while at the same time choking up growth. So it's a tough time for policymakers, and that has a secondary effect on precious metals, mainly through the avenue of gold, which is still primarily a quasi-monetary asset rather than a traditional commodity as far as investors are concerned.
Okay, so I'm not going to go and put you on the spot, and you don't just have to limit your answer to sort of like gold and precious metals and PGMs. If you had to pick out one commodity for 2022, what would it be and why?
I would probably go for either palladium, or if you have the guts for it and the appetite for it, rhodium. Really mainly because of the factors that I mentioned earlier, right? The fact that we're moving from a position of surplus to a position of deficit over the course of the year, and this could be compounded by a need to build pipeline inventories. And the reason why I would pick one of these two is that all of the analysis we've made gives us quite a lot of confidence that this turn of events is highly likely to materialize.
And you said that if you had the guts for rhodium, is just rhodium more volatile, or is it just great luck?
It's a tiny market. It's difficult to invest in. There aren't many vehicles that you can use to invest in it. The form that it comes with is not very liquid. You would need to buy sponge if you wanted to buy physical metal, so powder, which is not it's not something that's as easily available to investors, even sophisticated institutional investors, but there are ways to access it. And yeah, if you're prepared to deal with the lack of liquidity and its volatility, then I think for me it looks like an attractive proposition. With the caveat that we never offer investment advice, Andrew. And anything your listeners or your attendees hear is just our own view and our own assessment of the market, of course.
Yeah, I think that my sort of favorite acronym in the investment world is DYOR, do your own research. So yes,
exactly. Yes.
Yes. So we should just remind our viewers on that. And if there was one commodity that you would avoid, what would it be?
Look, as you know, we're very specialized, and we only really cover precious metals officially. Now, of course, we pay attention to the wider commodity space. We just don't publish official views. So I probably wouldn't feel comfortable saying I hate XYZ base metal or energy commodity. But one general point I can make is that if I had to choose, gun to my head, I would probably avoid commodities whose prices benefited immensely or were boosted particularly by the past 12 months supply chain challenges. And look, I appreciate we already discussed the perpetuating zero COVID policy in China and the impact it has on the shipping industry and all that. Having said this, my base case, or Metals Focus base case, is that supply chain challenges will ease over the course of the year. Plus, the world is finding ways to live with them and deal with them. So on that basis, I would probably, on balance, try to avoid commodities that have received, let's say, a supply chain friction boost in the last 12 months.
And I'm just going to go and sneak in one last question, if I may, and hopefully
Sure.
I'm not going to go and sort of like wrong foot you. But I guess that over the course of the last 2 or 3 years, if there's one prevalent theme throughout the mining industry, it's been ESG, the move to the green economy, and sort of the energy transition. It's a bit of a sort of general kind of question. How do you feel that ESG has impacted the precious metals industry over the last 2 years?
the impact has been profound, and I mean it's multi-tiered, right? So one obvious and very direct impact is the focus that mining companies are placing on ESG metrics. I mean, and you can see this also in the work we do. I mean, if you had asked me 4 or 5 years ago, will you be producing work on ESG metrics, I would have told you what's ESG metrics. And now we're publishing work on precisely benchmarking different mining companies on such metrics ourselves. So there is a very clear direct effect in that they're spending capital to make sure they achieve certain targets, and that has an impact on the capital that they're spending on growth or reserve replenishment, and so on and so forth. When it comes to PGMs in particular, there is of course also a longer term effect, which is, you know, electrification of the automotive industry, the move towards battery electric vehicles. That is, there's no way we can avoid this having a dramatic impact on ounces consumed, but this is more of a medium term effect. I mean, for the time being, it's I wouldn't go as far as to say it's negligible, but the impact on demand is modest, and probably still outweighed by the fact that we have tightening emissions legislation resulting in higher loadings per car. But if we were to look 5 or 10 years out, look, it's an existential threat to PGM consumption in the automotive industry, this switch to this electrification, and you know, the industry will just have to deal with it and find new segments of demand to replace this loss.
Mm-hmm. Well, it's been an absolute pleasure having you on the show. It's always great to have Metals Focus at Mines and Money events. We wish you a successful 2022. And that was Nikos Kavalis, founding partner of Metals Focus. Thank you very much for your time, Nikos.
Thanks a lot, Andrew, and look forward to many such events, and we will always be delighted and honored to participate.